Welcome everyone. Welcome to TAKESTOCK Live. Every Wednesday, 15 minutes after market close. We're well into the second season now, running every Wednesday into October. Next week, we're looking forward to some VMS stories from CNX, Calinex Mines, and RCLF, Rockcliffe Metals. We'd like to thank the TMX Group and TSX Venture Exchange, our event partner, for helping us keep the conversation between companies and investors going in these very unusual times. We also recognize the vital support provided by our sponsors, Fasken, MNP, Lead Jones Gable, Olympia Trust, and the CSE, who helped us launch the forum back in 2014. We'd also like to thank our supporters, our extended network, for helping us in launching this initiative. Particular thanks goes out to Calgary Meg and CIM, as well as many others. And we'd like to thank Investmentpitch Media and the Newswire for helping get the word out. Now, getting down to business, welcome, all of you, our attendees and guest presenters. Note our disclaimer. This presentation is for information only. It's not a solicitation to buy or sell stock. Companies pay fees to present at TAKESTOCK, and TAKESTOCK and its principals, Raj Joshi and Mark Francis, may have equity investments in companies we invite to present, may consult with the companies, and make no representation or other recommendation in regards to these presenting or any other companies. You should do due diligence and seek professional investment advice. Some housekeeping matters as well. You will note a red button on your screen toward the top. If you lose audio or have any other trouble, just click it and you should be instantly reconnected. Normally, we run just under 45 minutes, and toward the end, after the companies present, there should be room for answering some questions, so feel free to use the chat board, type in your questions, but please be clear about to whom your questions are addressed. Each company will give a presentation, and that'll be followed by panel discussion with the Q&A. We encourage you to connect with these companies directly in order to get detailed information. There will be information on how to contact them at the end of the session. Today's special edition is sponsored by Conduit Capital Advisors. Conduit Capital Advisors has sponsored today's TAKESTOCK virtual webinar. Derek Wood, founding partner of Conduit Capital, is with us today and will be moderating today's webinar. Conduit is a capital markets consulting company active in areas of capital structuring, capital restructuring, property vends, management recruitment, and investor awareness. Derek has been active in Canada's capital markets for 25 years. In addition to his role with Conduit, Derek is also a registered exempt market dealer with Cape Cove Financial and CEO of a public junior mining company. Northstar Gold Corp, featured in today's webinar, is a Conduit client. And Cape Cove, a registered dealer, has and will likely participate in future fundraising efforts for Probity Capital Corp as new product becomes available. So with all that out of the way, I'd like to call upon Derek to take it away. Welcome.
Okay, thanks very much, Raj. I would like to thank everybody for turning up today. It's an exciting day. It sort of felt a little bit this last week like the good old days in the junior mining market. And I think today we got presenting two separate, different ways of investing in the mining market. Northstar Gold is an active junior company, just went public on the CSE on January 2nd. And we have Brian Fowler, CEO, today. Interestingly enough, some results were issued today that were pretty interesting results, and Brian Fowler will be going over that. So I've gotten to know Brian very well through this process of going public and now doing this awareness part of the business on behalf of Northstar Gold. And anyway, we should have some interesting thing. Afterwards, Probity will be investing, and Peter Christensen will also be explaining the merits of also investing in the junior mining market, but in a diversified, tax-efficient way. Two really interesting ways. There's no doubt there's a lot of interest in our sector right now. The inflows through the ETFs and the market activity. It's starting to feel like the good old days. So, Brian Fowler, CEO. Northstar Gold Corp will start, and they'll each do about a 13 to 15-minute presentation, and we'll follow that up with a question and answer session. I'd like to let you know that you can ask questions. There's a chat function on your screen, and at the end of both presentations, we'll be directing calls to both the presenters. So first up is Brian Fowler, CEO of Northstar Gold Corp. Brian?
Thanks, Derek. It's great to be here. It's very timely. As you mentioned, Northstar, today we came out with a fairly substantial release documenting results of our phase one, our protracted phase one diamond drill program on our 100% owned Miller Gold property in the Kirkland Lake region. So without further ado, we'll get right into it. I got the obligatory cautionary statement. And Northstar's, prior to going public January 2nd this year on the CSE, Northstar operated as a private company for 11 years, focused primarily on gold exploration in the Kirkland Lake region in northeastern Ontario. The company has 3 100% owned projects. Our flagship is the Miller Gold property, situated 18 kilometers southeast of Kirkland Lake. And our other 2 projects are the Bryce Gold property, which is a intrusive hosted gold, VMS, precious metal enriched deposit property about 35 kilometers to the southwest, and our milestone copper nickel cobalt property, which is a former Teck property with a historic estimate. Kirkland Lake, as most mining investors know, is it's an excellent address to have if you're in the mining space, especially the gold space, having produced over 24 million ounces of gold from 7 mines over the past almost 100 years. Part of a Northstar's going public initiative involved augmenting the board and bringing on a special advisor to management. And you can see that we've got a very experienced and accomplished roster of individuals that have extensive mining, exploration, geology, investment banking, corporate development, finance experience in the sector. And particularly, I'd like to mention our special advisor, Mike Sutton, who's won Prospect of the Year Award in 2006 for the discovery of the Macassa South Mine Complex. Mike is a very awesome addition to our group and a very hands-on advisor. On the capitalization ownership profile side of things, Northstar's got 38.8 million shares out, so we still have a very attractive share structure. 47.3 million on a fully diluted basis. Our cash position right now is just under $1 million. Market cap kind of bounced around today, but last I looked, we traded 800,000 shares, and we're sitting around 41 cents. Onward and upward, I hope. On the profile side of things, you can see management insiders own just under half the shares, about 47%. 21% are options and warrants. The IPO subscribers came in at 26%, and we have a 6% institutional base, which I'm pleased to let listeners know that Probity is part of that ownership. So during the past 9 months, we've had a fairly active amount of news flow, a number of challenges, but we're persevering. We closed our IPO in late December at raised $3 million, got our listing on the CSE, and in February we commenced our phase 1 drill program on the Miller property. And then in March, we announced and closed $1 million flow-through financing to augment our treasury. And shortly after that, we had to unfortunately shut down drilling owing to COVID-19 complications and concerns. And then in June, early June, we announced we did manage to drill 2,200 meters in 13 holes and announced some phase 1A drill results, 18 grams over 4 meters in the historic vein 1 zone on our property. And then we announced resuming drilling in late June after the COVID issues. And we also had our geophysics program, a fairly substantial, multifaceted geophysics program kick off that month. And then today, you see the headline from today's news release. We were very pleased that we've got some very, we've discovered 3 new zones that collectively add to what we're calling the Allied Syenite gold zone. And yeah, so we'll just get right into that and give you more background on the company. So our flagship project, the Miller Gold property, is 18 kilometers southeast of Kirkland, as I mentioned before. It's 1,100 hectares. It's unique in that it shares a lot of very important geological characteristics of deposits in the Kirkland camp, being the style of mineralization, which is gold tellurides. We've got similar age rocks, and we've also and the gold mineralization has been dated the same as the Kirkland camp. And the controlling structures, you've got the Cadillac Garter break and secondary or structures in the Kirkland camp, the main 04 break, the amalgamated break. And we've got what's called the Catherine Fault, and these things all link up. So with all these similarities or inferences that we're tapping the same source of gold mineralization as the Kirkland camp. And we're so far so good. Zooming into the property, we've got about 3 kilometer by 2 kilometer area of intense alteration, hydrothermal alteration mineralization centered by the Catherine Fault, and which seems to be a controlling structure for the emplacement of 3 syenites, the orange blobs that you're seeing on this map. And these are intrusive stocks that host are intensely altered and host gold in veins as well as in disseminations. And more recently, just this drill program, we've discovered a very significant zone on the flanks of these, on the flank of the Allied Syenite, completely within the volcanics. So we've got gold telluride style mineralization, both in veins and in the volcanics as well as in the syenites. The property is the site of the historic Boston Creek mining camp. There's 11 shallow shafts in the property, 1,000 meters of development. In 1987, the company came in and developed a historic estimate over what was called the Miller Independence Mine. And I guess this is live. And so we've part of our objective with this drill program, phase 1 drill program, was to test some of the merits of that resource estimate and step out from that. I guess the easiest way to explain what we've got going here, I'm going to zoom into the Allied Syenite and talk about what we did here. I should mention that we drilled 28 holes, 5,000 meters of drilling, and just over 5,000 meters of drilling in phase 1. A number of the holes were directed to this is the #1 vein zone, and the historic estimate is up in this part of it. And then a number of holes on the Allied Syenite, which is this purple intrusive blob, that stock that comes up, and we drilled 6 holes on the Syenite, and you can see that as we drilled this thing, we discovered that there's a number of stacked horizontal veins that appear to be horizontal veins that all are gold bearing, and collectively this whole area we're calling now the Allied Syenite Gold Zone. You can see, I'll get into more detail, but a couple of the flanking holes, hole 49, we returned 1.43 grams over gold over 118.5 meters with an 8-meter interval running 8-gram interval over 15 meters, and 19.5 grams over 4.5 meters. Conversely, on the west side of the Syenite, hole 47 was drilled outside and came into the Syenite. And you can see a comparable intercept. These are broad, albeit low-grade intercepts, but this is early days. But a picture is definitely developing here of a potential near surface gold resource. There was a number. We've also drilled a number of holes on the number 1 vein zone outboard of previous holes. We were getting 18 grams over 4 meters in one hole, and 15 grams over 2 meters in hole 46. I'll show you more detail on this going forward. So here's a list of the significant drill results to date. Results in red are results from current phase 1 drilling. I touched on these numbers. Hole 49, 1.4 grams over 118.5, 8 grams over 15 meters, 19 over 4.4. This is in the number 3 vein. And in hole 47, 1.2 grams over 107 meters. Again, a couple 4.6 grams in the 3 vein, and I believe this 10.2 grams is from the number 1 vein. Some of the more historic holes, you can see, are similar tenor, similar grade, 1 gram over 97.5 meters, gram over 104 meters. So clearly, we've got a low bulk tonnage, low grade cap setting up over the top of the planet or the allied syenite. Footwall to the allied, I should mention, we developed in the first phase. We discovered a vertical zone quite deep, what we're calling the allied zone, which seems to be a vertical feeder to the upper layer cake type system. The planet Syenites, it's another Syenite intrusive just situated to a kilometer north of Allied. We drilled 4 holes on that. We're still waiting on the results. You can see some of the previous results. 0.6 grams over 147 meters. It's very significant. We have similar expectations over the planet that we do out of the Allied in terms of tons and both bulk tonnage and narrow high grade. The number 1 vein zone, which was the historic estimate, I should mention that was 270,000 ounces, 11.5 grams per ton. About 2/3 of that resource is situated on our property, on the Miller property, and the remainder on a neighbor's property. You can see some of the results that we've gotten historically, as well as just this past go round. More on this in a bit. And yeah, the Miller, we haven't drilled it yet this year. And in the number 2 vein, a few more, another discovery from phase 1 drilling. So this map illustrates, zooms in on the allied syenite. I know it's busy, but it zooms in on the allied syenite, and it illustrates all the drilling that was done in this area in phase 1. As mentioned, there's about 4 holes that are on the planet Syenite outside of this map. The historic estimate area is illustrated along in here. This is the trace of the number 1 vein along here, and the work to date has demonstrated that this number 1 vein is incredibly continuous. It's about 750 meters wide by 750 meters down dip. It still remains open. The allied syenite that pops out on surface is situated in here. This broader area illustrates what we know of it at depth. This shallow area, or this dotted vertical structure here, is the allied zone at depth, which we believe is a vertical feeder. And then this red dashed area demarcates the allied syenite gold zone as we've got it to date. It's about 200 meters wide by 100 meters, 200 meters by 100 meters by 150 meters deep, and it's open to expansion along the flanks of the syenite. She mentioned that hole 47, this is the first hole that's ever been drilled on the west side of the syenite. A couple of cross sections on the property. This one looking north to east, north illustrates the grades and what the layer cake nature of the veins are within the syenite. And this is the north-south section, which illustrates pretty much the same thing. I think I'm running out of time here, so I'm going to wind this up. Lastly, or getting towards the end of things, this is the planet Syenite. I mentioned we've got 4 holes in here. This just illustrates there is an exploration target defined here of 3 to 5 million tons, averaging 1 to 3 grams. This was a earlier 2015 hole by Northstar, and as I mentioned, we've got a few other holes that we're waiting on results for this. We did a fairly substantial geophysics program. This is a chargeability plan, 150 meters down. It illustrates that we've got 600 meter by 1.6 kilometer chargeability zone, which means that there's sulfide associated. The red means there's a presence of sulfide. You can see where the intrusions are. So these intrusions are definitely centered to a very large mineralizing system, the Catherine Fault ripping through here. So excellent drill targets, and it just substantiates what we already suspected, that we've got a very large and robust mineralizing system. Phase 1 drilling, this is mostly complete. All the drilling is complete. We've just got some geophysical data processing going on. Goldspot Discoveries Inc. Has been commissioned to model our geophysics and assist us with their AI routines for laying out a second phase of diamond drilling, and which will hopefully commence in October.
Right. I'm just going to need you to wrap it up. If there's a sort of a summary, we can get into stuff.
All right, I'll skip that slide. This is the summary. Yeah, we're so I hope after viewing all of this, you can see that we've got a very special project, and we're at a very interesting time. The results are very interesting and supportive of additional exploration. You can learn more on our website, and yeah, thanks for listening.
Derek, your mic's off.
Oh, okay, there we go. Sorry, Brian, I was saying, good presentation. The time sure does go by quick sometimes, and we will be doing a more detailed presentation here in the next week or so, going over these results in the future for Northstar Gold. Northstar Gold has a great capital structure, and we got some great results now. It's a great property, and it's great to meet Brian. So just please do reach out to either Brian or myself if you want some more information, and we'll include you on the next invite. So that's great. Thanks, Brian. And so now, next up, Probity Capital Corporation, co-owner and founder we have with us today is Peter Christensen. And I've looked at a lot of flow through over the years, and I think the timing with the market just starting to do what it's doing right here. There's a lot of uses for flow through, but one is just to gain exposure to a great looking junior resource market. And Peter's going to quickly go over the benefits of everything, and then we're going to do a quick Q&A. So please do put up your questions, and for either Brian or Peter, and we'll get to those at the end. So thank you, and go ahead, Pete.
Great. Thank you very much, Derek, and thank you to TAKESTOCK for giving me the opportunity to speak to you today. I'm going to talk to you about Probity Capital Corporation. I'll give you a little overview of flow-through shares and flow-through limited partnerships. Then I'm going to touch on the key differentiators between us and our competitors. And if we have some time after that, we may run through a 10K example, but I'm not sure if we will. So let's see how far we get. There's our disclaimer. We can go through that later if you'd like. So who are we? Probity's been around since 2014. We launched our first limited partnership in 2016. We were planning on launching our next limited partnership in the near future, which will be our 10th flow-through limited partnership. In my former life, I was Executive Vice President, National Sales for a group called Mineral Fields and Pathway Asset Management. While I was there over an 8-year period, I had a team of 5, and we raised just over $1 billion within an 8-year period. My business partner is Brent Larkin. You may recognize that name. He comes from the investment banking side. He was over at HSBC, where for a little while he ran equity capital markets, he ran derivatives, he ran syndication and closed-end structured products. And for those of you who are not aware, closed-end structured products encompass all of the flow-through limited partnerships under the prospectus format. He was then headhunted over to Macquarie, where he's one of 6 guys that ran Macquarie Canada. While he was there, he ran syndication, closed-end structured products, and public-private venture capital. Then RGMP bought out the wealth division at Macquarie, which he was a part of, and he went over to RGMP, where he was involved in investment banking for approximately a year, negotiated a package, and walked away from there and came to me asking me if I wanted to start a flow-through company. He said, I have a unique structure that's different from everything else, and you have a lot of contacts. What do you think? So shortly after that, we started Probity in 2014. Our portfolio manager is a guy by the name of Glenn McNeil. You probably recognize that name. He's been in the industry for over 40 years on the PM side, predominantly in the resource sector. And for just under 10 years, he ran Century's NCE flow through, which was one of the biggest in the last heyday in the mining sector. So I hate to say it, but between the three of us, we've got over 70 years experience when it comes to sales, marketing, banking, and portfolio management in the flow through space. It's a very interesting slide. I'm not sure if everybody's aware of it, but the marginal tax brackets have gone up significantly over the past 5 years. I'm in Ontario today. You can see that we've gone up 15.34%. The folks in Alberta are up 23%. And you can see in Nova Scotia, they've got the highest top marginal tax bracket at 54%. So I always say there's two ways to make money. One is by increasing your assets, and the other one is by keeping more money in your pocket and saving on your tax bill. And that's what we'll talk about today. So just a little overview for a few of you that may not be aware of flow-through. Flow-throughs have been around for a long time. It's the 50s, I believe. Actually, I think it's around 1957. The government wanted to encourage people to invest in junior oil and gas and mining, and in order to do so, they offered tax deductions. So in our particular case, it's 100% mining, and you receive 100% CEE deduction, which is called a Canadian Exploration Expense. In addition to that, on the mining side, you receive a 15% federal investment tax credit, and there are also additional provincial tax credits. In BC, there's a 20%, in Quebec, there's 20%, in Ontario, there's 5%, and there's a couple others in some of the other provinces. So there's really only two ways that's enshrined in the Income Tax Act so that you can deduct on your taxes. One is RRSPs, which everyone's familiar with, and the other one is flow-through shares and flow-through limited partnerships. So the key difference between the two is with an RRSP, you generally put your money in, you'll wait 10, 20, 30 years till you retire, you'll get 100% tax deduction. And then when you take your money out, you're going to pay tax on the full amount that you take out, similar to interest income or earned income at your top marginal tax rate. With flow-throughs, and in our case, we endeavor to give the money back within approximately 13 months to 16 months of the final close of raising capital. So you can use that money over and over again, usually every 1.5 to 2 years. In addition, you receive 115% in tax deductions or more. And then when you take the money out, you're paying capital gains as opposed to earned income / interest income. So these are speculative securities. The market caps in our case are generally from 10 million up to 500 million. These companies are spending a lot of money on exploration and they don't have a lot of income. So the government's allowing them to, flow through their deductions to you to write off on your taxes. So when we came out with our product, we wanted to make sure that we didn't come out with a Me Too product. We wanted something unique. We like to think it's more of a virtuous circle where everybody wins, starting with the investor, the advisor, the mining company wins in this situation. And if you all win, we will win at Probity as well. So we believe that the current flow-through structure was challenged. We believe that flow-through is asset turn, not asset management. We are not asset managers. This is all we do. I like to think we're tax product specialists. All of our competitors have either ETFs or mutual funds or different types of products. We focus 100% on this. And our portfolio manager, Glenn McNeil, only works on our flow through. So I kept hearing over and over again, I've been in this industry since 2005, and I kept hearing, you know what, I'll give you my money, but please just get me my tax break and get me my money back to me. Don't hold on to it for 24 months or longer. I mean, why are you investing in this product? Is it for an investment in junior speculative mining stocks or oil and gas? Or is it for the tax deduction? Well, in most cases, it's the tax deduction. So the next two slides are going to show you what our competitors do for the most part, and then what we do a little bit differently. Now, this is a basic walkthrough of the existing flow-through structure and process. I'm going to focus in on a 24-month duration fund. Now, there are other competitors out there that are short duration, I believe as short as 12 months. And I've actually seen competitors out there that have a duration as long as 5 years. So for this case, we're going to focus in on the 24-month duration. Keep in mind, they're asset managers. They charge a management fee of 2%. Well, if you have a $20 million fund over 2 years, you're looking at $800,000 in fees, and the government charges approximately 13% in tax on top of that. So you get into fees over $900,000. Well, we don't charge a management fee, okay? So you're better off on day one. They go out, they raise the money, they do it through a prospectus. Most of them only offer A class. However, some have been coming in with F class recently. Now they go to place the money. Now I want to look at it from the point of view of a mining company. Let's take one, let's say Tudor Gold. It's one we've invested in a couple different times. We've done quite well with. Let's say Tudor Gold wants to raise $5 million by issuing flow-through shares. In most cases, these companies will go out and they'll get an agent or a banker. That could be RGMP, Canaccord, or one of the big banks. Those bankers will come in, they will collect agent fees, and they will raise the $5 million for Tudor Gold. Well, in a lot of cases, the first thing they're going to do is they're going to go out to companies like ours because they know we're sitting on the capital and we need to deploy it. So they'll go out to, one of our competitors, Middlefield, and then we've got 9 Point, which the portfolio manager is Sprott, and they'll say, how much of this $5 million do you want? And people put their hands up and they take $1 million or $2 million until the whole $5 million is gone. The problem with this is these are private placements and there's a 4-month hold. Well, guess what happens after 4 months in a lot of cases? A lot of them will hit the sell button because they know the first one out gets the best price. And that drives down the price of Tudor Gold. And if we've got it in our portfolio, it also drives down the unit price. So this is not good for anybody involved. Number one, the mining company stock has been hit. The advisor's not happy because their investor has lost money. The investor's not happy because they've lost money. And the only one that really wins here is the banker that comes in and takes the agent's fees and walks away. Okay. So they've placed the money now and they start selling it 4 months in a day sometimes, and they've got cash in the portfolio. Do they give the cash back? No, they hold on to it until the end of the duration, in this case, 24 months, till they roll it into an open-ended mutual fund. Keep in mind how they get paid. They get paid by a management fee. So they're encouraged to hold on to the money as long as possible to earn a fee. Then for you to get your liquidity, they roll it into an open-ended mutual fund. Well, there's actually no need for an open-ended mutual fund. People don't realize this. That's simply an asset gathering tool where once it rolls in, they hope that you forget about it and they continue to earn a 2% management fee. Now, if you're on the ball, you're probably going to get out of that fund on day one. Okay. Well, you and everybody else that's on the ball. And then in a lot of cases, you find that you drive down the price of the mutual fund as you try to liquidate and get your liquidity from the mutual fund. So that was one of the biggest things at Mineral Fields. I kept seeing that over and over again. The fund would be launched at $10. Then all of a sudden, we'd hear that you were getting $8 back, which is pretty good when you count the tax deductions. But by the time you got it out of the mutual fund, it was $7. And the investor was saying, well, what happened? Well, it got driven down as you all tried to liquidate at the same time. So is this really what an investor needs in a tax product? Can you improve the overall outcome for the investor, advisor, and mining issuers? And can you do this more efficiently and cheaper? Well, that's what I'm going to talk to you about next. So here's what we've done. As I mentioned, no management fee. You're better off by about $800,000 or more, including tax on day one. Okay. We raise the money. We do it through a prospectus like our competitors. We offer a BC only fund. I'm not aware of anybody else that does that. We have a Quebec fund. Some of our competitors have those. And we have national class. We offer both A and F units. And then we raise the money. Say it's 20, 40 million, whatever it is. We go to place that money. Okay, here's where we're unique in certain circumstances. Whenever possible, we want to go directly to the mining company. And here's where the mining company actually wins. Whenever possible, we want to take all of the flow-through shares. So at 4 months in a day, we don't have to compete against our competitors and drive the price down. So now the mining company doesn't have their stock hit. The other thing too is when we do a deal with the mining company, our due diligence fees are approximately $7,500, of which $4,500 goes to background checks. The next time we do a deal with the same company, if it's within 24 months and nothing has changed with the directors or management, it's $2,500. If they deal with a bank or a banker, they're going to be looking at $20,000 plus for fees. So they really like this. And then the final thing is, if we have all the flow through shares, we can work with the mining company to eke that stock out into the market over a certain period of time without impacting the stock price. So that's how the mining company wins here. So 4 months in a day comes along. If we don't have any competitors in on the deal, we start eking the stock out. We now have cash in the portfolio. Well, we don't roll into an open-ended mutual fund. We send the cash back directly to the clients. In the cases of IROC, it goes to their cash account. In the case of exempt market dealers like Derek Wood, you're going to see a check show up at your door if you're an investor. Okay. The other thing too is we don't have to wait the full 24 months or whatever the duration is, because now we've got cash, we can send it back. So we send the money back in 2 tranches. The first tranche is generally done within 9 months of the final close raising capital. And the second tranche is generally done within 13 to 16 months of the final close of raising capital. And that depends on whether you get into the fall or the spring offering. But again, the cash goes directly back. So now you don't have to roll into a mutual fund. You don't have to worry about driving the price down in the mutual fund in order to get your cash back. The other benefit is if you bought these before, you get a T5013. Well, if you roll into a mutual fund, you have to worry about the adjusted cost base calculation. Well, if we send cash back like we do, you don't have to worry about that. All of the information is on the T5013 form. Finally, warrants. When we have warrants inside of the portfolio, which in the past we've had it about 40% of the time on the deals. If you have a competitor that rolls into a mutual fund and you get out the first day, if those warrants are not in the money, you don't get any upside because you're out of the mutual fund. With us, because we send the cash back, as soon as we dissolve, I have to go to the RBC cage, pick up all the share certificates, send them back to the mining companies, and I get them re-registered in trust for the limited partners. So in certain circumstances, if the stock goes up significantly and these warrants become in the money after we dissolve the LP, you as an investor may see another check come back. Okay. So you see how it's a bit of a virtuous circle where everybody wins from the investor and also if there's advisors involved, and then you see how the mining company wins. Now, we don't charge a management fee. So how do we get paid? Well, we get paid by that banking fee that gets paid by the mining company. So instead of the banker coming in, raising the capital and walking away, we come in, we take the banking fee through our EMD connection in the process, and we get paid out of that. And that gets paid by the mining company, and it doesn't hit net asset value. So again, it's a win-win. And I know I'm running out of time here, so let me just review the key features, and we'll have to wait until next time to run through a $10,000 example. So the flow through key features, as I just discussed, national class units generally qualify for up to 115%, Quebec 128, and in BC 126. The structure seeks to better align investors, advisors, and management. It's 100% publicly traded mining companies because we're trying to turn this as quickly as possible. So liquidity is paramount. There's no management fees, and I just discussed there's no rollover mutual fund and the benefits behind that. And our products have been offered by way of a prospectus. And that's probably where we'll end it for today.
Peter, thanks a lot. I thought that was great. And there was something I liked about your fund when I looked at it. I was in the middle of that mineral fields meltdown in the last market, and I'm glad that you've addressed some of those issues.
Yes.
So look very forward to working with you. And like I said, it's an exciting time. So if we have a bit of time, I'm just going to start to address some questions, Brian, if you want to come back on. I'm going to start with a question. I saw it here, forgive me, but Thomas Vesna, and he was asking about the timeline for the last 5 drill hole results on phase 1B, and what is management doing to ensure they hit the timelines that they promise going forward, as virtually all deadlines promised to shareholders unfortunately have been missed. And I wonder if you could just quickly comment on that, Brian.
Well, I've learned with this that making those types of predictions is a completely losing proposition because I've been wrong every time. And for that, I totally apologize, but there are a lot of circumstances and things going on in the background that delay things. COVID was one of them for sure. We had during the first part of phase 1, we had, I'm making excuses here, but we had a lot of coarse gold to deal with, and you have to do metallics, you have to re-assay. So it takes a long time to figure out what exactly you have, because when you come out with the numbers, you want to make sure they're right. So that being said, we've got 4 holes left on the planet that we haven't announced yet because we don't have the assays for it yet. I've been told that we should have numbers by the end of the month. If we run into some further complications for assaying, then we'll have to deal with that. But that's what I'm hoping. Going forward, we definitely need to take a closer look at our projections, and I got to stop. being so optimistic.
Not a problem. These happen. Sometimes it's hurry up and wait in this business, and I think the COVID has exacerbated that problem a little bit. But the next question here is coming from Dave Bonkers, and he's got a question from Peter here, and he is asking, given the short timeline to be able to invest money, do you feel there's enough opportunities to get the money invested in time for this tax flow season coming up?
Yeah, so this time of the year, we've got till December 31st to make the investments, and there are so many companies out there right now. We've been doing this since 2016. I've got a lot of relationships over the years. Glenn McNeil has a lot of relationships. People know we're out there. We have finders calling us and dealers and bankers calling us on a regular basis, and I've got a short list of about 200 companies that Glenn and I are speaking to on a regular basis. So we don't see any problem there. But you know what? We'll see. We'll do a closing in September. We'll do another closing in October, and we'll see how things go. And if we have to shut it down early, we absolutely will. The most important thing is investing it properly for the investors. But we don't see any problem with it.
Okay, sounds good. I'll give you another question here. Comes from Mike Marchaw. Hey, Mike here in Calgary, and he's just asking if you could compare and contrast what you do with some of these charity flow-through offerings that he's seen.
Yeah, well, that's a different animal, right? So, they're more of a quicker turn, and they get more of a guaranteed return for the investor. Where I think that the markets are looking really good as far as mining for the short and medium and long term right now. So I think it's a better opportunity to be going a little bit longer. But it never hurts to do one with the charity and then maybe one with us just to diversify. But you could miss out on a lot of the upside by doing the quicker turn for the charity.
So Brian, another question here comes from Thomas Vezina, and he's asking, what's the reason that you went back and sank an extra drill hole in the Allied zone?
Well, we drill hole 49 was a pretty special hole for us in the Allied. It probably was our best hit in vein 4, in the vein 4 discovery, and the real interesting aspect of it is that most of those grades are in the volcanics outboard of the Syenite. So we thought we'd step out a ways from that and see if we can replicate that or get a sense on the geometry of that. So we're waiting on those results. So that was the reason for that drilling that hole.
Okay, great. So listen, we're gonna kind of wrap this up. It's about the length of time that we planned, but there's one more question for Brian, and it's coming from George Palfy, and this is a question that I've been getting all day, and it's something we got to talk about a little bit, I guess. But he's just saying you need to raise more money. Great results. How soon do you think we might have to raise more money? He's asking.
Well, we're positioned to do that now. We're we've got our numbers. We're getting our story together. We're going to have a full-on marketing effort initiative this month, attending some very high-profile conferences. So we're raising awareness and we're actively marketing because we need cash to carry on phase 2 drilling. So soon. Your mic's off there.
Yeah.
I had it on, then I turned it off to actually start talking. So it's dyslexia. But at any rate, listen, I think Raj is going to flash all the contact numbers on the screen. I'd love to field any questions somebody might have about any of the products. There's still, if there's a financing here, who knows what it'll be, but likely a private placement. There's going to be a big advantage, I believe, in this market and having free trading stock. And I think, from my perspective, the IR guy, Northstar Gold, vastly undervalued. Probity, like getting involved with them, I think they have one of the best offerings in the flow-through space in a diversified manner. And I can thank the guys enough for coming out. Reach out directly to me or directly to either of the companies. And if you have any follow-up questions, and thanks very much, Raj, and for putting this on. We really like the Take Stock Alberta. Hope we get a live one going on soon too. Cheers.
Absolutely. Thank you for coming back, Derek. Thank you to the presenters. Thank you to Conduit Capital Advisors, and thank you to the audience. Until next Wednesday, 15 minutes after market close, more mining opportunities. Be determined in your due diligence and ask tough questions. Take Stock Live, signing out.
Thanks, guys.
Thank you.
Yeah, thank you very much.